how much Bitcoin can you actually afford based on your salary? I know a lot of people are like, stack sats and chill, man. Great motto, by the way. However, how much can you really stack realistically depending on your salary? And does it make sense to stack Bitcoin for the long term? Shouldn't you just invest everything into the S&P 500? Every major finance guy out there is going to tell you, put it all in the S&P 500, son. Don't worry about it. Well, the S&P 500 does okay too, but Bitcoin does better. And Bitcoin has a lot of upside potential in the coming years. So I want to talk about how much you can invest theoretically, where your money is probably going if you're an average person, and what that long-term implication could be for buying Bitcoin. Before we get into that, just a quick reminder, if you like this video, whack a thumbs up on it. And of course, if you're new around here, make sure to subscribe to the channel so you can get more great videos just like this one. Let's get it. How much of your income should actually go towards investing? How much should you be investing? One of the most common things people ask when they start planning for their future is, how much of my income should I be investing? Well, if this sounds familiar, kudos to you for looking ahead. Investing not only helps you build wealth, but it also secures a nest egg when it's time to retire. And while you don't need much these days to start investing, of course, that's very true. You can start investing with $10 if you want. The key is that you regularly contribute beyond your initial deposit so that you have more money to grow over time. This is also true. Dollar cost averaging, can invest consistently. I digress. I continue. But just how much your income should go toward investing? Well, the sweet spot, according to experts, is 15% of your pre-tax income. Interesting. Matt Rogers, a CPA and director of financial planning at eMoney Advisor, refers to the 50-15-5 rule. According to the rule, 50% of your take-home pay should be allocated to essential expenses: housing, food, healthcare, transportation, childcare, debt repayment. 15% of your pre-tax income, including employer contributions, gets invested for retirement, and 5% of your take-home pay is used for short-term things like an emergency fund. This leaves 30% of your income that can be used for discretionary expenses like entertainment, dining out, and of course, more saving. Interesting. Let's break this down. So here's a report that really goes into, well, where are people spending their money? Key findings here. The average household's monthly expenses are $6,000, or that adds up to $72,967 over the entire year. That's up from 2021, by the way. You can thank inflation for that. The average annual income after tax is $83,195, also though up from 2021. So some people have got some bumps in their pay. Housing, of course, is the largest expense for people. Food, also a big expense. Transport as well. Now let's break this down a little bit more here. So that average, by the way, just to really underline this number here, the average income, $83,195. Okay. And yet, the average expenditure, $72,967. That means, in America, based on these figures, the average American spends 88% of their after-tax income, and they have a savings rate of 12%. So they're able to save 12% of their money. Now, as they mentioned here, it's somewhat off the recommended savings rate of 20%. It's also a 3% decline from 2021, meaning that people have had to cut back a bit on their savings in order to fund more of the day-to-day life stuff, you know, the housing, the transport, all these kind of things. So where is everyone's money going? Because this is important to understand where your money is going if you want to find more money to be able to invest. But we'll just take that 12% number. It's about $10,000 per year that the average person actually has after all their expenses to be able to spend on investing, ideally, not just buying stuff, but to actually be able to invest that money, $10,000 a year. But if you want to find some ways to free up some more money, well, this is where most people's money is going. 33% of their spending is going on housing, average at $2,000 per month. Now, maybe you're more, maybe you're less than that, but it's definitely something to think about. It's a big number. And depending on where you live, for example, where I live here in New Zealand, I think people's number is going to be higher because rent is very, very expensive. Housing is very, very expensive here. So you guys in America might be spending less. Transportation, 17%. That's a huge, huge, huge cost in terms of total expenditure. So that may be an area where you can find improvements and be able to get more money to invest more money, right? Maybe it makes sense instead of driving to work, take the bus. Maybe you can carpool with somebody. Maybe it's time to upgrade to an electric vehicle. It's going to cost maybe a little more upfront, but you'll save a lot in the long term by not having to buy gasoline at whatever it costs per liter these days. Personal insurance, pension stuff, 12%. I guess insurance is important. Healthcare, 8%. Groceries, 8%. Of course, you do have to eat, so that's important. You should eat well. I think that's also a very, very important thing. Health is wealth, right? So I don't think there's anything wrong with people eating well and spending 8% of your money on food. Entertainment, 5%. You don't need to go to the movies. Think of all the Bitcoin you could buy with that. Come on, guys. Come on. That's $3,500 a year. No, I don't know. It's nice to have entertainment too, of course. That being said, a lot of some of the best things you can do, you don't need to really pay for. Going to the park with your kids is free. It's amazing. It's something you remember for the rest of your life. When that new Marvel film, probably not going to remember what it was about 5 minutes after you leave the damn theater. Just a thought. Restaurants and other meals away from home, 5%. About, again, $3,500 on this one. And that's a pretty interesting one because when you think about eating out, I like, going to a restaurant the weekend or something like that, or getting takeaways once in a while. But 5% of your total annual spending, that's a pretty big number. And that's one of those things that the average person could probably cut back a little on. Like, seriously, take a sandwich for lunch to work, man. Don't buy a sandwich down the stairs for $15. You make one for $2 at home. Little things like that can really, really add up. And yeah, it's okay to do it once in a while and stuff like that. But if you have a habit of buying a $5 coffee every morning and a $15 sandwich and $5 worth of snacks, $25 a day, 5 days a week is $125 a week. Now we're looking at $500 a month. That adds up real fast. So it's worth thinking about where your money's going in order to have more money to invest. On down the line, cash contributions, apparel, all that kind of stuff, buying clothes, education, obviously very important, personal care, obviously very important, alcoholic beverages. These people they surveyed do not drink very much, apparently. Only $49 per month. Yeah, okay. I've been there before when the doctor asks, like, hey, how many alcoholic drinks do you have a month? Like 6? Oh, that's bad. The real number was like 36 or a week. Back in the university days, man, I don't really drink anymore these days. I have like, I don't know, a beer every few months or something like that. Maybe a bottle of wine once in a blue moon. But anyway, I digress. Still, these people are definitely not big drinkers because you can certainly spend a lot more money on alcohol. And look, alcohol is a terrible way to spend your money. I know it can be fun. I've been there, done that. I drank like a fish in my 20s. I largely regret that. I think I could have done a lot better things with that money, with my time, with my health, with my relationships, all these kinds of things. Still, though, if you guys are only spending $50 a month on alcohol, you're probably going to be okay. You go out and have a couple drinks with your buddies once in a while, you're fine. You're fine. If you find that your alcoholic expenditure is like, 10% of your monthly spending, you got a problem. Not just for your spending, but potentially for your health as well. So there you go. That's the public service announcement from Lark for today. Now, before we get into how much Bitcoin you can buy, I just want to let you know about my weekly newsletter. It's called Wealth Mastery. It's freaking awesome. It is seriously the best damn newsletter in the cryptocurrency industry. Every single issue is so jam-packed full of value. It is ridiculous. We talk about NFTs, we talk about altcoins, we talk about DeFi, we have technical analysis, the latest on the news. We do airdrop alpha, like altcoin alpha. Super value-packed, every single issue. You can sign up for free and join our weekly readers of 75,000 people by clicking on the link down below in the description. Thank you. Now, how much Bitcoin can you buy? So, as we mentioned, if you're not going to start finding ways to bring even more savings in by looking at your transport costs or your going out costs or whatever it might be, based on these numbers we have right now, and you can find ways to modify, but based on the numbers we have right now, $10,000 a month. Or a year, sorry. $10,000 a year, that's what the average person has that they can invest. Now, you probably don't want to invest 100% of that in a Bitcoin. Big Bitcoin fan, but I'm a realist that most people probably don't want to invest 100% of that money into Bitcoin, and that's fine. How much, though, into Bitcoin? Well, let's say you are doing $400 a month. So $400 a month, what's that add up to per year? It's $4,800 per year. Not bad. That's half of your money. Maybe invest the other half in the S&P 500 index funds, right? So if you had been doing that, just let's do some math here. If you've been investing $400 per month into Bitcoin for the last 5 years, where would you be today? Well, you would have invested $24,000, but your current portfolio value would be $45,436. You would be up 90% on your investment. That's running right through a market cycle, this big downturn in the market, all that stuff. You'd still be up 90%. You would have basically 2 Bitcoin, 1.9999 Bitcoin. Pretty interesting, right? We're going to remember that 2 Bitcoin in a few minutes. Now, if you had taken that same amount of money and invested it into the S&P 500, where would you be at? Well, you would have done okay as well. You would have around $30,975, let's call it $31,000. You'd have $31,000 right now. You would have invested still $24,000. So if you had invested half into Bitcoin, half into the S&P 500, Bitcoin's outperformed dramatically so. Remember, you've almost doubled your money with Bitcoin, whereas with the S&P 500, you've got like 20% gains, 25% gains, something like. It's not bad. Not awesome. But that would be a pretty well-rounded portfolio. Half in Bitcoin, half in the S&P 500, relatively safe with a lot of upside potential for Bitcoin. Not financial advice, of course, just giving you some examples of how these things could work in your portfolio. But you can see massive outperformance here by Bitcoin. And of course, one of the big value propositions is that over time, the dollar, of course, is being devalued. So you have to invest. It's almost not even a choice anymore. You've got to be investing. The value of Bitcoin keeps going up over time. And yes, that's very volatile. Yes, there's brutal bear markets. We know all these things. The value of the dollar, it continues to be degraded as central banks debase your currency by massive money printing. The dollar is not backed by anything. They took it off the gold standard back in 1971. So your dollar since 1971 has been backed by a, hey, trust us, bro, from the government. Not great. Not a great base for your monetary policy. Now, where does Bitcoin fit in the bigger picture of monetary assets? And this is important because we have to understand what's the potential of our investment moving forward. Now, if you fast forward, let's say 10 or 15 years, where are your investments going to be? See, the S&P 500 on average gains around 10% a year on average. So in 10, 15 years, your S&P 500 index investments, you're investing $5,000 a year, is going to be doing pretty damn well. But your Bitcoin, if it follows along with how things have been going, could be doing a whole hell of a lot better. In fact, we are targeting the market cap of gold in the long term. So what is the potential return here? Because I'll tell you what, if you take that S&P 500 investment and you do that over 20 years, you're going to get up to $300,000, right? And you're investing consistently. And with our Bitcoin investment, we're not even going to invest consistently. We invest over 5 years. We got our 2 Bitcoin. That's it. We're done. We're never investing another penny, although you can keep dollar cost averaging in, obviously. But just as an example, if you continually invest $400 every single month for 20 years into the S&P 500 based on historical returns, in 20 years' time, you will have a balance of $300,000. You will have invested $100,000, and you will have made $200,000 in profits, which is fantastic. Now let's talk about Bitcoin. So let's say you didn't invest any more from today into Bitcoin. You just bought $4,800 a year for the last 5 years, and you're done as of today. And you just hold that Bitcoin moving forward until it reaches the market cap of gold. Might take 10, 15 years, for example. Let's say it takes 15 years, right? So same time frame. In 15 years' time, you're going to sit down with the guy who bought the S&P 500 index fund, and has been investing consistently, $5,000 a year for 20 years, and you're going to compare notes. How did you do? Well, if Bitcoin gets to the market cap of gold, Bitcoin worth $650,000 per coin. Remember, you got 2 Bitcoin because you dollar cost averaged for 5 years consistently, putting in $40 a month, regardless of market conditions. You got 2 Bitcoin. Those 2 Bitcoin are worth $659,000 a piece. You now have $1.3 million. And of that $1.3 million, we're just going to round it off here, that's almost all profit. That's almost all profit because remember, you only invested $24,000. Now, this is obviously an example. We can't predict what's going to happen in the future with any kind of certainty. Bitcoin may never get to $650,000, although I believe that it will get to $650,000 at some point in the future. It may not be 10 years. It may not be 15 years. It might be longer. It might be less time, depending on how bullish Bitcoin ETFs become. But the outperformance of Bitcoin over time is, I think, something that the average investor cannot ignore. And you don't have to put 50% of your money into Bitcoin. Maybe 5% is enough. But it's certainly something that I think at this point, as BlackRock and Fidelity and Invesco and Franklin Templeton and Ark and all these other companies are trying to get Bitcoin ETFs, that it's not necessarily something that should be ignored anymore either.